Hello friends, good morning, good afternoon and good evening. Welcome to my channel. Today's topic is option strangle. So before we get started with the topic, let's analyze the market on multiple time frames and see what the market has done on Friday and how is it going to be in the coming days. So I have my ShareCon terminal open. So let's maximize this. Okay, so I have a 3 minute chart. So let's go to a daily time frame and see what did the market do in the past 10 days. So on 28th September we have got this green candle because of the finance minister's announcement, and the market has rallied up, and next day it gapped up and went high, and after that profit booking has started and it has come down, but this level was very critical, and if the market had turned bullish we would have expected a bounce from here after this candle, but since this bounce has failed, and as you can see price was caught between 200 period moving average and 20 period moving average, so we were expecting an up move from this side if the conditions were apt, but surprisingly market turned bearish and it has gone down. So now till where it can go down till here. First target is here because this is the level which is the bottom of the consolidation. This was the top of the consolidation and this was the bottom of the consolidation. So this is the first target of the market if it starts coming down. So let's analyze this on a weekly time frame. Weekly time frame, still super trend is holding. If it breaks the super trend, then the target will be this 23,428, which is its 200 period moving average, to take the support. And let's look at monthly time frame. Monthly time frame is still bullish. It is still right above the super trend and the trend line is not broken yet. But if it breaks from here, I don't know what will happen. We hope that we sustain above this line so that our bull run can continue. Okay, now let's come to the smaller time frame of 10 minutes and analyze the trade which happened on 19th 4th October. So market opened above the super trend and it stayed there till 11:40. It was not able to go up, so it stayed there, and all narrow range candles had formed. And then at 11:40, the price broke the 10-minute super trend, and after that, free fall has started. So you can see from here till here, almost 400, 700 points it has dropped. So let us go to the further smaller time frame, which is 3 minutes time frame, and see what happened. In 3 minutes time frame, you can see the first candles were above the super trend, and at around 9:30, 9:40, it broke the super trend. If you have taken a short here with this super trend as your stop loss, then your stop loss would have been hit here, but the candle didn't close here, so you could have taken an entry again and then you could have got out here. Again you got an entry here and got out here. So it was a good trending day. If you follow the same strategy on 5 minute time frame, then your stop loss won't have hit at all. You went short here and the whole day super trend stop loss was not hit. So if you can ride this full trend, then you could have made huge money. But here our psychology matters, and there we have to work on our mindset to follow a system. Most of the time when you start making money here and you see this green candle coming up, you exit saying that you don't want to lose any profits. So but this is the mentality we should develop, that if you have a rule of super trend as your stop loss, you should continue to follow that. Okay, now let's come back to today's topic, which is option strangle. So this is our standard disclaimer. Okay, so what is a strangle? So last week we covered straddle. This week it is a strangle. Both are neutral strategies. Strangle involves buying and selling of call and put, which are out of the money at different strikes. So how do we identify these strikes? I will show you on the option chain. Selling both call and put above and below market is called short strangle, which is favorable in range bound market, and buying both call and put is called long strangle, which is good before expiry or any event day. There is mistake here, so this is not straddle, this is strangle. Okay, now how to create a short or a long strangle. It is similar to what we have seen in the last video, which is our straddle video. You have to choose the strike below the market for put and above the market for call in case you're shorting. And if you're going long, then you have to choose the put which is above the market and the call which is below the market. So it is vice versa. So you have to sell or buy both the strikes at 10 a.m. in the morning in a stable market period. Use day high or day low as your stop loss for the strikes chosen. Quantity has to be as per your risk management rules, which is 1% for me. I prefer you also keep 1%. If you are a risk taker, then you can go up to 2%. If day high or day low stop loss is hit, then market is trending in that direction. So that is the indication that market is trending for that day. You can either trail your stop loss if you're comfortable doing that, or you can convert that to a credit spread or a debit spread depending on short or long strangle. So let's go to the option chain without wasting much of your time. Okay, so I have a bank nifty option chain here. So you can see 27,700 is at the money strike. Okay, we have to look at the market as well. Or there are two ways. The first simple way is to see what is the premium which the market has. 27,700 call is at 431 and put is at 399, 830. So what do we do is we note down this 830, then 27,700 minus 830 is equal to 26,850, or you can go with 26,900. You can go with 26,900 put Okay, so we will note it down in a sheet. So we can go put 26,900 put. PE, what is the price? What is the price we have? 26,900 is 126. So here is 126, and the other strike we are going to choose is 27,700 plus 830, 28,530. So 28 600, which is 125. Call, which is 125. Now if you notice, both the premiums are same, so this condition is met, right? And now let's go and look at these charts. 28,600 put, 28,600 call, and 26,900 6,900 put. Okay, so we look at the market here. So 26,900 is somewhere below the market, which is somewhere down way below this, and 28,300 28,600 is way here. So we are playing with the range of the market which it has given via the premiums what we have calculated. So you're playing this entire range. So if it breaks this range or this range, only then you will be able to get into the loss. So now how do we keep the stop loss? So let's look at this candles. Like when you enter in this position at around say 10 o'clock, okay, you enter at this 10 o'clock, and then you will see what is the day high. So day high was here, which is 650. So you keep your stop loss above this. So stop loss will be day high if you're shorting. And the similar, in a similar way, if you are shorting this at 10 o'clock, so this is the 10 o'clock time period, then this will be a stop loss, which is at around 6. This will be your stop loss. So if you see in how many scenarios the stop loss was hit here in this scenario, right? And from there market started. The moment stop loss hit, either you could have trailed and got out here, or you can buy a put underneath and waited for it to run whole day. Here in this scenario, the stop loss was not hit at all. It went on till bottom. So usually this side stop loss hit, this side you buy a call, and then you continue to run till the end of the day. So this is how you manage a strategy. It's a very simple method, and the selection of the strikes have to be in this fashion in a calculated manner. And if you do this every day, you'll be able to make money every day. It's not a it's not a big intelligence required for doing this kind of stuff. Only thing which is discipline is more important in the market than strategy. Strategies are so many available in the market. If you can train your mindset to just trade with this super trend also, you'll make a lot of money. But you have to believe in this. Most of the time when you see the patterns, you always have some bias in the mind stating that market may rebound or it can go this way, that way. You have to just trade what you see on the charts without applying much of a thought. That's how you make money. Okay, so this is the end of the session for today. And also keep in mind that this is the most important factor, risk management. Like for example, if you look at this, if you have a capital of say 5 lakh and your risk taking capacity is 1%, so 1% into your 5 lakh, 5,000. So 5,000 is your quantity. Assume that your stop loss is about 200. Okay, so 200 minus this will be 74 points. So how much quantity you can trade? 5000 divided by this. So you can trade a quantity that is 60. You can trade a 60 quantity with this kind of stop loss if you have a 74 point stop loss. Okay, so calculate like this and then only trade, because you will only be losing this 5000 if one side stop loss is hit, and not even losing this 5000, because if you're losing one stop loss is hit, another side you're booking a profit, so you will have minimum risk in this. So this is the game, guys. You have to keep your losses very small. With this one side stop loss being hit, another side you're booking the profit or continuing to trade in that direction with a credit spread till the end of the day. You can maximize your profit and you can get out with profit every day. The idea is to, even if you're not able to manage, you will get out with small loss, but do not play around with quantities. Try to change the equation or try, because when you change the quantities up and down, the price gets averaged out. So this may not be advised. So always stick to this rule. Have similar kind of premiums, have fixed stop losses, and then have a set of rules that if stop loss is hit, this is what I'm going to do. Condition 1, condition 2. See, the success for trading is risk management and how do you trade on a daily basis consistently. So these rules have to be followed and your chart has to be like higher profits, small losses. The days of losses should be very less comparatively. I had like 3 days loss last month and all the days are positive for me. So that is how you have to trade with these kind of conditions. It's not difficult, but it's not easy. So you have to focus a lot on your mind, because once the chart is formed you are easily able to understand that, but when the chart is forming it is difficult to trade. So you don't know what is going to happen if the chart has not formed till here. You don't know what is the next candle. This candle is going down. Now if you are a price action trader, you can see this is a red candle on a 20 period moving average. You go short with a stop loss above this. But if you don't know what to do, then it's a problem. So you need to learn first and get yourself educated in the right fashion from the right people. Do not go for strategies which you cannot understand or there is no logic you can understand. So you have to define your rules and then work accordingly. So that's it for this video, guys. Thank you so much for watching, and you can check out my other videos which are available after this video. You can subscribe to my channel and get to see all those videos. Thank you for watching.